chairing the meeting today. So first of all, can I remind everybody of some domestic arrangements? Can we please ensure that our microphones are turned off when they're not in use, that we don't interrupt other speakers, and that if we're attending the meeting and speaking and we persistently interrupt that meeting, we may be asked to leave. Can we all ensure our mobile phones are either on silent or switched off? I would like to remind everyone present that this meeting will be broadcast live to the internet and will be capable of repeated viewing. The whole of the meeting will be filmed, except where there are confidential or exempt items. If you make a representation to the meeting, you will be deemed by the Council to have consented to being filmed, and by entering this meeting as a speaker, you're also consenting to being recorded by the Council and to the possible use of those images and sound recordings for webcasting and/or training purposes. The Council, members of the public and the press may record, film, photograph or broadcast this meeting when the public and the press are not lawfully excluded. Right, before I move to the first item on the agenda, I think I better have everybody note that I've decided to move the CIFCO presentation and the CIFCO report part 1 and part 2 to the beginning of the agenda. The minutes, the forthcoming decisions list and the work plans will be discussed at the end of the meeting. And this is in order to ensure that the public interest is served first. So moving to the agenda, first of all, apologies for absence and substitutions. Do we have any such?
I will go through the list as a roll call for
fine.
members to say whether they're present or not. So can you please acknowledge when I ask you? Councillor Sean Dawson. I think I take that as absent. I can't actually see her. Councillor Jane Gould.
Here. And good morning.
Good morning. Councillor Cathy Grandon.
I'm fairly sure I did see Councillor
Yes,
Grandon.
I can see Councillor Grandon. Your mic is on, Councillor Grandon.
Oh, it's now working. It wasn't working properly. Can you hear me?
Yes, I can hear you. That's fine. Thank you. Councillor Alistair McCraw.
Thank you.
Present.
Councillor Mary McLaren.
Present.
Councillor Adrian Osborne.
Present.
Councillor Terence Carter.
Present and good morning.
Good morning. Councillor James Caston.
Present.
Morning.
Morning.
Councillor Lavinia Haddingham.
Present.
Councillor Dave Muller.
Present.
Councillor Keith Scarf.
Present.
And Councillor Keith Wellham.
Present.
Okay, item 2 on the agenda is to receive declarations of pecuniary and non-pecuniary interests by members. Are there any to declare? No. Okay, item 3 on the agenda to receive notification of petitions in accordance with the Council's petition scheme.
None received.
And item 4, questions by the public.
None received.
And item 5, questions by councillors, that is accepting questions to the various reports.
None received, Chair.
Thank you very much. So we now move, as I've stated earlier, to the change in the agenda. We move straight to item 9 on today's agenda, which is JOS 1931, the Capital Investment Fund Company, CIFCO Capital Limited, Business, Trading and Performance Report for 2019-2020. I want to state as we start, the Joint Overview and Scrutiny Committee will be examining the business plan, and I'm afraid not the governance structures of CIFCO or the basis under which it was set up, or any decisions relating to that, or indeed its terms of reference. And I'm unlikely to allow questions in those areas because they directly fall outside the responsibility of this committee today, and I think would be a matter for the full councils. Now, please note, any questions by non-committee members, those present in the meeting, should be for points of clarity with the item discussed, because the debate itself will be for the committee. And I'll ask that non-committee members wait with any questions for clarity until all committee members have completed their questions. We're going to go through quite a rigid formal listing of members to allow everybody an opportunity to speak, because we know that there are sometimes time delays in these remote meetings. So first of all, I think I can introduce the board members of CIFCO Capital Limited who are here to answer questions. I would like to suggest to them they could introduce themselves briefly, starting with Chris Horworth, the chair of CIFCO Capital.
Yes, hello, good morning, everybody. I'm here, it's Chris Horworth. I chair CIFCO, and we'll be starting a brief presentation shortly when you're ready.
Do we have Henry Cook?
Yeah, good morning. Henry Cook here. Yes, I'm one of the two other non-executive directors with a background in finance.
And Mark Sargentson.
Yes. Good morning, everybody. I'm Mark Sargentson. I'm also a non-executive director of CIFCO and a chartered surveyor.
Thank you. Councillor Rick Mayer. Councillor Rick Mayer.
Sorry, Chair. Yeah, Councillor Rick Mayer. I'm the Mid-Suffolk CIFCO board member.
I believe we have apologies from Councillor Michael Holt. Councillor David Busby.
Good morning, all. I chair Babergh Holdings.
Councillor Peter Gould.
Good morning, everyone. I'm a member of the Joint Holding and Mid-Suffolk Holding Board, company boards.
Thank you. Now, Nigel Golder.
Good morning, everyone. Nigel Golder, Director of Jones Lang LaSalle and an advisor to CIFCO.
Neville Pritchard.
Good morning, Neville Pritchard, Investment Director at JLL and advisor to CIFCO.
Emily Attack.
Good morning, I'm Emily Atack. I'm the Managing Director of CIFCO and also the Assistant Director for Assets and Investments.
Thank you very much. My apologies for any mispronunciations I may have made during those introductions.
Chair,
so members,
Chair,
yes, sorry.
I do believe you forgot Councillor Brewster.
I do apologise, Councillor Brewster.
That's all right, Councillor McCraw. Yes, I'm here, and I'm the chair of the holding company of CIFCO and the other companies from the Mid-Suffolk angle.
Do apologise, reading from quite a long list here. Members, we now turn to the report, JOS 1931, and I'd ask Councillor Peter Gould, the Mid-Suffolk District Council Cabinet Member for Assets and Investments, who will introduce the report.
Thank you very much, Councillor McCraw. I'm pleased to support this report detailing CIFCO Capital's performance over the last 12 months and the proposed business plan for the next 12 months. The business plan is a fundamental part of CIFCO's governance and ensures accountability to its shareholders. CIFCO has provided the councils with approximately 3 million of net income since its inception in 2017. Approximately 1.6 million was received in the last financial year, and this equates to approximately 10% of the council's workforce costs, or 13.5% of council tax income. This income is essential in enabling the councils to continue to invest and deliver services within our districts. CIFCO forms only part of the council's investment, with funds also being invested in the delivery of new market and social homes and employment opportunities across our districts. The councils are due to start on site with the development of approximately 180 homes over the next 12 months, as well as investing in the delivery of 156 acres employment scheme in Stowmarket, and in supporting our larger town to adapt and thrive in the future. No investment is without risk. However, the professional and strategic approach adopted by CIFCO in investing and managing these funds for an income return has demonstrated the resilience of the portfolio, even in these difficult COVID-19 times. CIFCO collected over 70% of the March quarter rent and consequently was able to make the full debt repayment to the councils in March. Whilst difficult times remain ahead with the continued impact of COVID-19, the proposed business plan seeks to continue the investment of the second tranche of funds approved by the council last year, and in doing so to further diversify the portfolio away from high street retail, focusing instead on the industrial and alternative sectors, and to continue to deliver and grow this important revenue stream for the councils and to create a long-term legacy for those councils. The the chairman of CIFCO, Chris Howarth, and managing director, Emily Atack, have prepared a presentation to highlight the key elements of the business plan and performance over the last 12 months. Other members of the board, Henry Cook, Mark Sargentson, and Councillor Rick Mayer, together with their professional advisors, Neville Pritchard and Nigel Golders, are also here, as you know, to take questions after the presentation. Thank you very much, Councillor McCraw.
Thank you very much indeed. So now, members, we have the opportunity here to ask questions, but obviously that being an introduction, your questions may be better held back until after the presentation. But the opportunity must be given if there's any points on that introduction that members would like to raise. What we shall do in each of these questioning sessions is to ask each member in alphabetical order, regardless of council. So if I go round the members assembled, Councillor Terence Carter.
Not at this point, thank you, Chair.
Councillor James Caston.
No questions, thank you, Chair.
Councillor Sian Dawson, I don't think is here, unless she has turned up. Councillor Jane Gould.
Not at this moment, thank you, Chair.
Councillor Catherine Grandon.
Not at this time, thank you.
Thank you. Councillor Lavinia Haddingham.
No questions, thanks.
Councillor Mary McLaren.
Yes, I've just got one question. I just need clarification on the different Treasury management strategies. I don't understand that because we've got the same board and the same officers. Why is that different between Mid Suffolk and Babergh?
Okay, I think that is addressed in the report, but perhaps could be better attended to during the after the presentation.
Okay, yeah, that's fine.
I think at the moment we're not into specifics, but I believe it can easily be addressed. If you'd like to return to that afterwards,
I will.
I think that's
Thank you.
Probably going to throw some light on it. Councillor Dave Muller.
No questions at present, Chair. Thank you.
Councillor Adrian Osborne.
Thank you, Mr. Chairman. Just one clarification. You've got David Busby, Mid Suffolk District Council, Suffolk Holdings, and you've got Gerald Brewster, Director of BDC, Suffolk Holdings.
Okay. Accepting the fact that those should be reversed, apologies for that. I'm sure it can be, let the record reflect that they actually have the opposite jobs to each other, as it were. But they are both directors of the holding companies. Councillor Keith Scarf.
No questions at the moment, thank you.
And Councillor Keith Wellham.
No questions at the moment, thank you.
Okay. If there are any further questions from members, I think we're going to try and attempt to use the raised hand function. But in testing before this meeting, we became aware that there is a slight time delay and that hands aren't being raised quickly, and the system isn't raising the hand quickly enough or removing the hand quickly enough. So with that lack of responsiveness, you may just have to wave your hand about if I can see you on screen. For any other members present, and this is for points of clarity only, are there any other questions for members of the council who are not members of Overview and Scrutiny? No? In that case, we shall move on. The chair of CIFCO Capital, Chris Howarth, and Emily Atack, the managing director of CIFCO Capital and our assistant director of assets and investments, will now jointly conduct a presentation for CIFCO before we open for further questions and debate. Over to you, Chris and Emily.
Emily, I think you're going to share your screen, aren't you, to give the presentation?
I am, if you just bear with me 1 second. Is that, can you see my screen now?
can see EA at the moment, but I can't actually see the screen. But that's it. I can see it. I hope everybody else can.
Yes.
If everybody can see that.
I must confess, it hasn't reached me yet.
Right.
Here we go.
Give it a few moments. Right, I will do the first part of the presentation and then hand over to Emily. This is a summary of the business plan for 2021. And I think, next slide, please. I think it's important to bear in mind the purpose of the business plan. It's certainly a very important part of the company's governance. It monitors the performance of CIFCO over the previous financial year. It provides a framework and guidance for investment moving forward. And of course, as directors, we're accountable against delivery of that business plan. Next slide, please. I just wanted to do a very quick summary of the market as it stands at the moment. Obviously, we do have Jones Lang here with us, and I'm sure they will be able to answer any specific questions about that afterwards. But I mean, as far as the UK commercial property investment market is concerned, the turnover in 2019 was significantly down from the 2 years before. You'll see that it was about 44.5 billion compared to around 60 billion for the 2 years previously. And that's probably as a result of Brexit uncertainty and therefore few opportunities coming to the market. Then after the general election in December, that caused quite a resurgence in the market. And certainly Q1 2020, the turnover was just over 14 billion, but there were two very large transactions as part of that. The market appeared to be moving forward quite strongly, and the fundamentals of yield contraction and rental growth could continue to drive values, particularly in the industrial, warehouse, office and alternative markets. I mean, as we know, the shopping centres and high street retail assets had a very hard time well before the current COVID-19 crisis, really because of the internet shopping increase. And certainly, as a board, we were not really looking at certainly high street retail assets at all over the last year or two. Retail warehousing, again, seems to have stabilised, and the strong parts of the market, the industrial, warehouse, office and alternatives, as it says on the slide. Then obviously we were then hit by the COVID-19 pandemic, which caused a complete lockdown, and that meant that a lot of transactions couldn't proceed. We had two transactions which we're looking at, which we put on hold because of that. And in fact, we have we've aborted one because of the crisis, but we are moving ahead with the other one. And what the pandemic has done is meant it's increased focus on quality assets and led to strong covenants with long unexpired terms. And that's been the whole focus really of the investment that we've done so far into, as we'll see shortly, into a really secure portfolio. And one of the aspects that came out of the crisis is that as far as valuation was concerned, the RICS required valuers to put an uncertainty clause into their valuations because of the lack of evidence. And this is now, they're now starting to lift this again as the market is starting to move forward. Next slide, please. So looking at the portfolio, the total asset value is about 52.5 million, with a contracted rent just under 3.4 million. The estimated rental value of that, if all rent reviews and everything had happened, is about 3.6. We've got a total number of assets of 14 with 38 tenants. Then the WALT, the weighted average unexpired lease term, you can see is a good long period, which it points towards a secure portfolio. So taking into account breaks in leases, the average is 6 years, 8 months, and to expiry, it's nearly 8.5 years. In terms of yield, the initial yield, 5.78%. That's really that's on rental income on what we bought the properties for. The equivalent yield That's looking at rent reviews and various other things, and full rental value, and some of the costs on the way, 6.41, and a reversionary yield, just taking into account the rent review, is 6.4. At the moment, the void rate is just under 4%, and the running yield is just under 6%. Next slide, please. So during the year, we acquired 2 properties. That's probably less than we'd hoped, but it's been, as I said earlier, there have been few properties coming to the market, but we have acquired 2. One is the Honda car showroom premises in Milton Keynes, which on its own is a good, solid investment, but it also has the added advantage for us in that we own the property next door, and it has therefore solidified a much bigger and more sensibly shaped site in that location. And that's very much a core asset. And then also we acquired an office building in Epsom for £3 million. A little bit of work there to the possibility of adding value, so another good asset as part of the portfolio. Next slide, please. Looking at the current portfolio weighting between the first of all the sectors and also the covenant risk profile, we have ended up with a portfolio which is far more, well, is more secure than perhaps we'd originally intended, because of the sort of opportunities which we found in the market and what we thought were the right opportunities to buy. So if you look at the covenant risk profile, you can see that the 89% of the covenants of tenants are very strong. There are a few smaller ones, 4% average and 7% weak. Now, some of those weak ones, particularly, they're in little industrial estates, and actually that's quite useful to be able to work rents, move things forward, add value, and improve the asset by doing that. In terms of portfolio sector splits, you can see there looking at the pie chart, the largest section is office at 36%. There's a little bit of retail warehouse at 10%, high street retail at 15%, alternatives at 13%, and in that comes car showrooms, gyms, things like that, and then industrial at 26%. And if you look at the table there, you can see that we didn't buy any opportunistic assets. Those are the slightly higher risk ones where there are more opportunities to add value, but we really couldn't find anything we felt that was at the right price to reflect that risk. And therefore we've ended up with a portfolio at the moment which is mainly core, 83%. That's higher than we thought we would, and some core plus. And if we then move on to the next slide, you can see what our target portfolio weighting was. And I apologize that the colors don't match up with the slide before. But if you look at the target risk profile on the right hand side, you can see that we had a core target of 65 to 75%, whereas actually we're at 83%, and 5% at value add. Well, we haven't actually got any of the value add. And then looking at the target sector weightings again, offices were, as you can see in the slide before, we're at 36%. That's just slightly outside where we thought we should be. Industrial and warehouse, we're at 26%, and that's 25 to 35%. So as we carry on and invest the last 40 million, we will adjust those to get to what we think is a really good, well-balanced, well-spread portfolio. Next slide, please. Looking at the key investment criteria, which really are what guides us in our investment decisions. Looking for a target portfolio yield of about 5.25% to 6%. And as it says in the small lettering underneath, it's investing in secure income. And that's the important thing, secure income against strong assets with good quality and location. Now, the lot size is one of the changes. We brought that down slightly from, it was between 3 and 15, brought that down to 3 and 12, just to make sure the portfolio, as we continue with investment, is well balanced. The regional bias, As we said before, the weighting is towards the eastern region. It's not exclusively the eastern region, and we've ended up probably with about 40% of it which is not within our definition of the eastern region, although most of them are quite close. Quality locations, which we will continue to look at. Modern fabric with occupational flexibility, obviously very important in terms of reletting buildings and things like that. The full repairing and ensuring lease structure, and to make sure that the tenants are responsible for the buildings. And if possible, we like to see RPI or open market upwards only rent reviews, because that secures the income. So, I mean, if you look down at the bottom right, there are key assumptions: the further 40 million of capital to invest. And the other thing that we have changed in terms of the investment criteria is that we originally hoped to complete the full investment by April of next year, but because of what has happened with the pandemic having slowed everything down, we think that it's sensible to say that we think that we will do that by 30 months rather than by April. And I think that's important, because we shouldn't be out there buying things because we think we've got to. We should be out there buying the right assets at the right time at the right price. Next slide, please. So looking at the KPI performance for 1920, the net initial yield, which is marginally above that. As far as the equivalent yield is concerned, we're reasonably significantly ahead of that. As far as the 24-month full investment target to be achieved by April 2021, as I've just said, we think we're going to have to stretch that for probably a further 6 months for a sensible investment period. Quarterly rent arrears. Now, this is one where the portfolio has been performing extremely well, but obviously we have had a difficult time over the last quarter and possibly this quarter because of the COVID-19 crisis. So let's go on to the next slide and have a look at that. So we, as far as the March quarter is concerned, this looks at what happened there. The rent collected by the 5th of June for the March quarter was just over 70%. But what's important to realise about this, that means that nearly 30% hasn't been collected yet. But yet is the important word, because you will see here that as a responsible landlord, what we've done with the crisis is we've looked at working with our tenants. And the tenant, in the good old days, it used to be thought that tenants, you've got tenants and got the landlord, but now it's very much a partnership. So we have worked with tenants to make sure that they can manage some of the difficulties that they've been having. So you can see there's 73% of rents have been collected. 5% of the additional amount is really on a monthly payment plan to ease things for the tenant. 20% of rents have been deferred, and they have been deferred. They're not going to be not paid, they've been deferred. And looking at the risk factor of those, we don't think there is a risk that we will not receive those funds. So whilst they be deferred, the funds will be received in the future. There is also 1.4% of rents which are not going to be received because of tenanted administration and other matters like that. Now, obviously, the June quarter will also be difficult, but we will work through it and on the same sort of basis. Now, I will now hand over to Emily, who will take us through the rest of the presentation.
Thanks, Chris. Can everybody hear me okay? Yeah, good. So just moving on to this slide. This slide looks at the income that has been received by the councils since CIFCO's inception. So from this slide, you can see that the councils jointly have received approximately £3 million of net income since CIFCO began trading in 2017. In the last financial year, 2019-20, the councils benefited from 1.633 million which, as Councillor Gould mentioned earlier, is equivalent to approximately 10% of the council staff costs, or 13.5% of the council tax collected by the authorities. So you'll notice from this slide that the net amounts are different for each council, and this is a consequence of the treasury management strategies that both councils have employed. And in effect, Babergh has a different mix of loans, which it helps to support CIFCO with, to Mid Suffolk. So Mid Suffolk has more long-term loans, whereas Babergh has more short-term loans, and these are at different interest rates. And it's the cost of borrowing that has the impact on the different net receipt effectively. So currently Babergh's borrowing is cheaper than Mid Suffolk's, which is why there's a different net figure. They both receive the same gross amount effectively. So moving on. In 1920, the CIFCO accounts are currently being finalised as we speak, but the draft accounts show a book loss of approximately £3.5 million. This £3.5 million is the impairment effectively, and equates to approximately £500,000 worth of acquisition costs. Now, these relate to the costs of the assets that were acquired throughout the year. So in effect, stamp duty and professional fees, which tend to be broadly about 6.75% of the cost of the asset. There is a further impairment which relates to the portfolio revaluation, which was undertaken as at the 31st of March and saw a downward adjustment of approximately 5.66%, which equated to about 3.1 million. The value of property will fluctuate as a consequence of market fluctuations. And while some individual property values will be more affected, so for example, the retail market is seeing a lot of structural change, and we're seeing more shift in valuations as a consequence, other individual properties may be more resilient to certain market conditions, which is the benefit of having a diverse portfolio. There will also be fluctuations in value with individual properties depending upon where they are in their lease cycle, with assets where new leases have been granted being at the sort of peak of their value, whereas those that are nearing the end of their lease cycle will be within that valuation curve towards the lower aspect of their value, and then as the lease is renewed, then they will increase in value over the part of the lease cycle process. Whilst CIFCO is showing a loss of £3.5 million, it is in effect a book loss, and that loss would only be realised in the event that the assets were sold. CIFCO continues to deliver income to the councils, and indeed that was the purpose of CIFCO being established, to provide that long-term income to the councils. Within the report, we also mentioned the Public Works Loan Board consultation, which is the government has issued a consultation earlier this year looking at removing the Public Works Loan Board as a source of funds for yielding activities such as property investments. This consultation closes on the 31st of July 2020. A response will be submitted to the consultation, but as yet there is no timetable published for any proposed changes that are proposed within that consultation. The consultation is also looks forward, it isn't retrospective, so any changes that do come into play properties already purchased or loans already taken out. Should there be a change in PWLB as being proposed, then alternative funding sources will be investigated to enable CIFCO to continue trading. So, in conclusion, the business plan, as Chris mentioned earlier, is a really important part of the company's governance and provides a framework for the future investment acquisitions moving forward. It also provides key performance indicators, which are really important to be able to monitor the performance of the company against those indicators. The portfolio, as stands, is a balanced portfolio with risk diversified across sectors, locations and tenants. And this really is very key to the investment strategy. There is a focus on core assets, and particularly CIFCO are keen to focus on the industrial sector and refocus away from high street retail, where there are the structural changes occurring currently. The board recognises the COVID-19 challenges, and in many ways these are mitigated by that balanced and diversified portfolio, whereby there is no one tenant or property or location that is so weighty that it has a significant impact on the portfolio as a whole. So the investment strategy, as set out earlier, is not significantly changed from the previous year. It is about particular emphasis on the covenant strength at this point in time, but largely it is about continuing to build a diverse portfolio and mitigate the risks by doing so. And as finally, CIFCO Capital continues to provide the councils with an important income stream, and that is probably never more so important than at the current time. Thank you.
Sorry, I think Councillor McCraw may have a couple of problems with his mic at the moment. Just bear with us for a minute. So Councillor McCraw dropped off the meeting. He's just rejoining now. And I can see he's back. Let's see if he has any luck getting the mic to work. No. Let's have a look. Councillor McCraw, can you hear us? Right, we're just going to see if we can get somebody to help Councillor McCraw. Right, we might need to take an adjournment for about 5 minutes to see if we can get Councillor McCraw back to join us. If we take it to 10:15, and hopefully we'll be back then. Thank you.
Okay.
Just making sure we're live streaming. Okay.
First of all, apologies to members of the public and obviously to people attending the meeting itself for technical difficulties. We have quite a lot of attendees for this meeting. Having heard the Chair of CIFCO and the Assistant Director, Emily, make their presentation, it's now come to the time for members' questions. Now, at this point, I should state we have received a large number of questions, and some of them may in fact be repeating themselves to some extent. What I would ask is that if members have questions that have already been substantially answered in a previous answer, if they could either withdraw or alter their question to take account of that, just so that we don't end up repeating ourselves over and over again. So once again, we'll ask members in alphabetical order for their questions. It may be that they have several. We will do that way, and there will be further opportunity for questions after that. So we'll start off with Councillor Carter.
Certainly, I have several questions. I hope I can ask at once and then go through them later. The first being, and I do apologise about the background noise. The first one being on point 4.1. I do realise it was explained about 40% of the portfolio in the east, with others pretty near. I'm assuming the pretty near means the Milton Keynes ones, which are in Bedfordshire and not in the east, as we would understand it. So I'm assuming that's the point that's made. On point 4.8, a question for Councillor Mattison myself would be we seem to have gone into the officer sector as that has lost favour due to home working rather than.
We seem to have lost. Oh, no, sorry. Okay.
Sorry, can you hear me?
I can now. Yeah.
Okay. I do apologise about my daughter, who's wanting to outshout me. We seem to have gone to the office sector as that has lost favour due to the home working. Rather as we walked high street as that went into decline. Are properties attractively priced because others are divesting? And with that point, I wanted to ask, I do realise that at the moment, due to the hot desking being, with COVID, we are having same amount of office space for less amount of workers going in. How is that going to be affected once the COVID has been reversed, but home working is still going to be the preference? So are we going to be losing anything in that portfolio for that? Also on point 4.8, when are we going to be investing in renewable energy? And I do believe that I did have more questions, but at the moment I cannot remember because at the moment I've got slight interference on my end, so I do apologise about that.
Okay, and that's fine. Quite a lot in there. I don't know if Chris and Emily would like to take those questions, or if there are other members of the board who would be best placed in certain areas.
Thank you. Chris, I was going to suggest that Nigel and Neville answer the questions in relation to the market, particularly in relation to the office sector.
Exactly what I was going to suggest as well. Yeah, quite agree.
And the geographical components of the portfolio. And just a point in terms of the renewable energy opportunities. We have, I think we've only had one opportunity presented to us in this sector to date. So it is a sector that we are interested in, but obviously we need those opportunities to come forward. Once they come forward, we will obviously consider them, and if they meet the criteria, they will be taken forward. But to date, I think we've only had one renewable energy opportunity come forward, and it unfortunately didn't meet the criteria. So
it's probably worth saying on that, Emily, as well, that I mean that market is a new market, and obviously we are therefore that leaves a degree of uncertainty, and so therefore we're probably not the right sort of investor to be first into that market, but as it becomes more established, it is certainly something which we will be looking at.
Thanks, Chris. So Neville, Nigel, could you answer the questions in relation to the office sector and also our geographical makeup of the portfolio?
Yes, it's Nigel Golder speaking. I'll start, and perhaps my colleague Neville Pritchard will just talk through what we've actually seen during COVID-19 in terms of capital investment activity. It is a fair question. It's a question we get asked rather a lot, actually, and what we have seen is very little evidence at this point that anything is going to change materially. And the reason we say that is because an awful lot of office occupiers are just re-evaluating how they use their space rather than whether they require it or don't require it. So we're going to see the trend, which has already started pre-COVID, of lowering density of occupational space within offices. So instead of having the lines and lines of people lined up next to each other, we think that there's going to be a greater diversification in the use of office space. This was something that was already starting to happen. There's a lot more leisure-based activity coming into the working environment. By that I mean gyms, cafes, and central areas for creativity and communication. And we think we're going to see more of that. That actually takes up more office space per head than desk space. So we remain of the view that actually we don't think it's going to materially impact the office sector. We also think a lot of headquarter companies are going to look very carefully at their spread of risk instead of being all in one building, which was the trend, an urbanisation trend that we'd seen for several years. We do think now that we may see more of an HQ and then a hub situation. And therefore we think that the regional office sector market may well actually see the opposite happen. And you may well see more regional offices built and occupied than otherwise would have been previously. It's also fair to add that since 2008, 2009, we've seen an awful lot of office stock disappear from the market. There is actually quite a low level of development in that sector. So the overexposure of office space in terms of surplus is quite low, and vacancy rates are at historically low levels for office space. So we don't actually see a tremendous difference in change at this time, other than how companies utilise that space that they have. Neville, if you are able to offer anything in addition to that.
Yeah, no, I'll just follow on with that. I think, we have to look at what we get out of office space, and, whilst Microsoft Teams calls are actually quite good, then we all know the shortcomings and people dropping out and the difficulty of getting the right environment and everything else that goes with that. And it's just not the same as looking somebody in the eye or shaking the hand and having those sort of personal meetings. So I think it's very difficult to replace the office with home working. As Nigel says, the use of an office has changed. We've seen a lot of movement towards hot desking, and in our offices, then there is effectively workstations for only 70% of the staff, on the basis that people are hot desking or working from home from time to time. And that's not unusual at all. But what we have seen is a greater increase in the areas for meeting rooms, for coffee, lots of sofas and this sort of thing. And that's because to attract the best staff, then offices have to provide an environment which is attractive and which has the benefit of a nice place to work. So in terms of the office space, we've seen very different uses of it recently. And instead of the intensification of hot desking, the one thing that COVID may bring is actually a greater desire for personal space, both in terms of elbow room and also in terms of having your own desk. So it'll be interesting to see how that works out going forward. But the one impact I think we're slightly nervous of in the office sector is that of the serviced offices, the sort of Regis type operation, just because going forwards, a lot of people all thrown into a mix of people completely unrelated with what they're doing at comparatively high costs per desk. Slightly nervous that those may suffer from home working, because the question for those people is what they're getting in addition to being able to work from home in their own environment, which isn't so different because they're not having that mix of people around, the greater social aspect perhaps, because it's a mix of other different occupiers. So the home working thing has become much more intense over the COVID period, but I think in many ways we've discovered the shortcomings of that. And as Nigel says, the overall supply of office accommodation is very low at the moment. And what we are seeing is rents are growing. Recently, the one we acquired in Epsom, the prevailing rents there were between £14 and £18 a square foot, and we've just got a renewal there at £21 a square foot. So we can bring the income up. The demand is there, and what we're trying to do is drive incomes forward, which is what we're achieving. Just on the two other questions which were raised, actually, if I come to those, and Nigel might want to add some points to those as well. As regards the regional bias, I think the first thing to say is the regional bias is indeed that it's a bias. It's not an iron ring put around the eastern region. Clearly, what we're aiming to do is achieve a very robust portfolio in terms of balance, in terms of quality of income, and in terms of quality of location. And whilst Suffolk's a beautiful place, then many of the centres are quite small commercial centres, and we do need to focus on the intrinsic underlying demand and value of assets, because if it's of local interest, that doesn't necessarily mean to say it's of interest to the investment market as a whole. They have to be good, strong commercial centres, and that's what we've tried to focus on. Certainly, we have no desire to focus on anything in the likes of Scotland or Wales or the northeast necessarily, but for the likes of Milton Keynes, which is a great growth location, we bought one in Lincoln, which is not too far outside, and some of the assets we've bought have been much more sort of M25 focused, because that's good underlying centre where the growth going forward and the commercial investor demand is very strong. And the number of opportunities which are available are very limited. By the time we've refined them down to those which meet the criteria, then they're obviously even fewer. And then when we've decided that something is good enough that we want to bid on it, then again, that's even fewer. And the ones that we actually win are even fewer still. And the good news is we don't win everything that we bid on, because if we did, we'd have cause to worry that we're paying too much. But they are competitive situations quite frequently, and we win some, we lose some, and that's just the nature of the market.
Can I just come in there, Neville? I mean, it's worth just making sure that the committee is aware of the figures. I think we looked over the period. We looked at about 65 opportunities. We bid on 16 and we were successful on 2. So I think that indicates the sort of the care that is taken over the assets to be acquired. Sorry, back to you, Neville.
No, that's fine. And there was some comment earlier on the renewables, and indeed we rarely see renewable or assets with an environmental aspect to them. The one we did find was a property in Hertfordshire, but we ruled that out on 2 counts. Firstly, the strength of the tenant was quite weak, and so there's no guarantee they wouldn't go bust. And secondly, the income stream was based on the turnover as to the amount of energy that was being generated. And there was no way that one could control that. And so the turnover may have gone down or up. And so there was no guarantee what income would come out of that, as opposed to a situation where you have a lease and you can actually predict what the quarterly income will be.
Okay, Councillor Carter, has that addressed the most of your questions there?
It has addressed the questions. I have also remembered the other ones I had. Would it be possible if I ask them, or do you want to move on?
Perhaps we should move on and come back to those at the end of the members' questions. We can assemble things from there, and of course they may be covered by somebody else. Councillor Caston, any questions?
Thank you very much, Chair. Can you hear me?
Yes.
Yeah, so a question regarding the current balance of 83% core and 17% core plus. Is the amount of asset within that core criteria a risk which would be the risk of being so heavily invested in core in a rapidly changing market? Are we investing where the market has been and currently is, instead of looking at where the market's going by not speculating so far and not being invested so much in core plus?
You're saying are we being too safe?
Well, I think it's quite important for risk management not to be completely safe.
Absolutely.
Because you'll miss the market as it moves on.
Fine. Okay, can we keep answers as brief as is possible that actually answer the question, because we do have a rather large number of questions. I'd just like to point that out. Who'd like to take that?
Yeah, perhaps I could just come in on that then quickly. I mean, we have certainly tried to find slightly more risky assets, but what you've got to look at is what is the pricing of those assets. And because the market has been relatively hot over the last 2 years, what we've found is that actually the more risky assets, the pricing is also on those has been pretty hot too. And what you get is yield. The secondary assets is what we call those. The secondary assets, the yields tend to come down closer to prime assets. The prime assets, of course, have got very, very strong fundamentals. They make for a very good, solid portfolio of secure income. And we are certainly still looking now for the more secondary assets, which have a greater yield. And hopefully, and there is a possibility, of course, that the current pandemic may give us some opportunities to find those, but at the moment we haven't been able to find them at the price that we wanted to pay.
Okay, that satisfy you, Councillor Caston?
Yes, thank you, Chair.
Thank you. Councillor Gould, have you any questions?
Yes, I have. Thank you, Chair. I think just as a comment to Councillor Caston's question, I would just like to say that the areas that have been invested in that have been traditionally safe may not be safe anymore. So what we consider might be too safe, in reality with COVID, are actually potentially moving to the more risky areas. I'll just throw that in as a comment, really. In terms of the green question, I just wonder whether there's any mileage in actually looking a little bit more deeply for green projects to invest in. Rather than, I think my question would be, do we wait for them to cross our path, or are we looking for them in a slightly more proactive way? And then I've got some questions that have been given to me by some other members. I think if I could just read some of those. One is page 47, the pie chart refers to investing a chunk of money in the food and beverage retail, including drive-ins. I think I would just like to ask how that squares with the statement on page 43, the environmental implications, which states that there is no known environmental impacts from the new business plan, and that both councils have actually declared a climate emergency and are keen to improve the sustainability of their portfolios. So how does that sort of chunk of money in food and beverages square with that, really? Just another question, please, could we see a copy of the full year financial accounts? Are CIFCO going to continue, this is another question, to invest despite the threat of a recession? And if so, what are you planning to invest into? And I just noticed that the PWLB consultation that you said you'd be looking at alternative funding, and I'm just wondering what that alternative funding might be. I think probably that's all I've got at the moment. Thank you, Mr. Chair.
Shall I come in on those points? So I think probably your question in relation to green projects and in relation to the potential drive-through as a small proportion of investments. So the Board of CIFCO are aware that the shareholding councils have declared a climate emergency and are keen to address sustainability within the portfolio. We are currently drafting a sustainability policy for the company with the assistance of Jones Langer, sorry, excuse me, our fund managers and our acquisition agents. So that is something that we do and are putting some real effort and focus into. So I think the other point should be that it isn't just about the assets that we acquire, but it's also about how we manage the portfolio and how we support tenants to make the right decisions about sustainability moving forward. So, for example, it may be that we have tenants who are looking to undertake some alterations to their premises. And in that case, we would certainly be encouraging them to look at other sustainable excuse me, technologies moving forward. So there is a commitment from CIFCO to help to address the climate change emergency that has been declared. In respect to the full year accounts, the accounts will be published when they're finalised, as they are every year. We anticipate this will be at some point throughout the summer. They're normally published with Companies House in either late July or August. So that's answer to that question. The question in relation to the recession, I might refer on to Neville as a market expert in that area. But just in terms of the PWLB funding, you asked a question in relation to alternative funding types. Now, at this point in time, the council uses a range of borrowings. It isn't all just PWLB borrowing at this point. In fact, within the report, you can see that there is short and long-term borrowings. The long-term borrowing tends to be PWLB. Short-term is other sources, which may be other local authorities lending to each other. So there are a range of different funding types. It is also still relatively early days in terms of looking at alternative funding types, but I know some other authorities have looked at municipal bonds, for instance. So there certainly will be a range of alternative options. Within the PWLB consultation, it does say that if local authorities wish to buy investments primarily for yield, they will remain free to do so, but they won't be able to use PWLB within the year that they've bought the asset. So just to sort of clarify that point. Neville, did you want to pick up the point about investing in commercial property at times such as this?
Yes. Firstly, we're not sure what is down the road. We know that an awful lot of difficulty will come out of the wash over the course of the next 6 to 9 months, as furloughing is no longer the case, and there will inevitably be some redundancies in various companies, and some companies will struggle to keep afloat. The degree of that is very difficult to estimate. We have had varying input from the likes of Oxford Economics and our own research teams. It is anticipated that the next 12 to 18 months will be difficult. Thereafter, there are all sorts of letters you can subscribe to, whether it's a U-shaped or a V-shaped or a W-shaped or a J-shaped or you name it, in terms of which way the economy is going to go. what we can say is that over the course of the last even 2-3 weeks, we are seeing quite a resurgence in the investment market. A lot of people starting to engage again from a situation where the majority of transactions were effectively frozen. And that has been particularly strong in the food sectors and the distribution sectors, but also offices are picking up fairly swiftly. Obviously, retail is proving sticky for the moment, but it's interesting to see how quickly the stock market's recovered. There certainly seems to be some belief there that things will not be all bad, but the fundamentals, I think, are that we still come back to the outline, the key features of the CIFCO requirements, which is to have a balanced portfolio and have ideally long-term income streams from good quality tenants. And what we are finding is the market is very much driven towards those more core properties and the lower risk properties. And actually, that's probably where we should be as well, not only for our purposes of deriving a long-term quality income stream, but also because that is where the strength of the market is and the underlying value going forwards, where there is least risk, and it will see us through what may be a sticky few years, but we'll maintain an income stream which is reliable.
Okay, that's Councillor Gould's questions. Is that sufficient for your answering at the moment, Councillor Gould?
Yes, I think so. I think there's just maybe something else around an exit plan if losses continue to fall considerably, because I mean, these are uncharted financial times, aren't they? And global recession being on the horizon. And so what is the exit plan? And I appreciate that, yes, times are hard, we all know that, and times are likely to become even harder. And keeping an eye on things is good. But presumably there are going to be some exit plans, and presumably there is a floor at which we say we've lost enough, and we need to kick into action one of the exit plans. Thank you.
Right. I mean, an exit plan would seem to me, I don't know, I'm just saying, but would seem a little bit alien to the very concept of CIFCO. But I don't know if anybody can answer that question.
So the fund has been set up for income, and it is continuing to deliver income. The losses that have been incurred have been book losses, so they relate to the fluctuations in value. So in reality, those losses will only be realised if those assets are to be sold. So there is no formal exit strategy for CIFCO as a whole. Now, obviously, part of the job of the board is to manage the fund, and at some point in the future, there may be opportunities where different assets could be considered for sale, but that would be because that's the right thing for the fund in terms of whether those assets may have increased in value or whether we see them no longer being in a position to provide the level of income that we wish to obtain. But certainly at this point in time, income still continues to be delivered and is we're still seeing growth in income, albeit we're seeing those capital values fluctuate in accordance with the market. But I think it is really important to say that those capital values over the long term, you tend to see property values have tended to increase even when you've had fluctuations during recessionary times. But the important thing for this fund is that it is income delivering.
Okay. Perfect. Thank you very much, Councillor Gould.
Thank you. Yeah, thank you.
Thank you. Councillor Grandon, do you have your questions at your hand, as it were?
Yes, thank you, Chair. My question from myself has already been answered regarding the office sector, so thank you very much. That was very helpful. I have got 2 questions from residents, Hadley residents, and they have partly been answered, but not in total. So I will ask those questions if I may. Question 1 from the Hadley resident is, what does the board of CIFCO estimate the total write-down known as impairments in the accounts, that will be shown in the CIFCO statutory accounts to 31st March 2020. And he's referring to also the situation going forward, saying that we have failed to collect around 30% of the rent to date, and so he foresees things being more difficult going forward. So he'd like an answer on that. The second question has partly been answered, but if I may ask it anyway, and then you can tell me. Why are over 40% of the properties purchased to date by CIFCO not in the stated geographical area targeted for acquisition in the east of England? Why were the CIFCO board unable to find enough suitable investment properties in East Anglia using East Anglia ratepayers' money? Thank you, Chair.
Okay. Just a question here. Emily, this is an observation. They are not actually using ratepayers' money, am I correct?
So we are borrowing funds for CIFCO. So we've talked about this already. So the funds are either PWLB or other loan sources. I think a point that probably should be made is that the income that is generated from CIFCO, so we've talked about the last financial year, 1.633 million being the net income into the councils. That's money that effectively comes from properties that may be outside of our districts, but that money is then brought into our districts and can be spent within our district. So the income that's generated from those capital value purchases outside of our district is actually being reinvested within our districts. So I think that's a sort of point of clarity in that regard. In terms of the impairments, that figure is the £3.5 million that was mentioned in the presentation and is in the report. And as I mentioned, that's made up of approximately £500,000 worth of costs of acquisition. And we expect until the acquisition fund has completed that there will continue to be an impairment in the annual accounts that relate to costs of acquisition until the acquisition programme has completed, and then the adjustment in valuation that we've talked about, which is the roughly 3.1 million. So we're anticipating that those impairments will be in the order of £3.5 million, which is the loss that that CIFCO is predicting for that financial year. I think in terms of the question relating to why are there only 40% or why are 40% of the assets outside of the Eastern region, I think we have addressed that question, and it is about the nature of opportunities that come forward and the importance of investing in the sort of strong capital markets to be able to deliver that income return to the company and to the councils.
And another point, I just thought I'd throw this in here. Of course, in some cases, you're in competition with other possible purchasers who may, in fact, be prepared to pay a higher price than CIFCO are. And you may find that that does not provide the return that is actually built into the system, the requirement to make 5.75 or 6.41%, somewhere around that figure, in order to service the debt. Am I correct?
Whenever we're looking to acquire assets, we're always in competition with other investors, and yes, those investors may have a different criteria, and as a consequence, may be prepared to pay more for an asset than we may be.
Okay,
and that's what we indicated as well by the numbers. As I said earlier, we've looked at 65 assets over the year. We've bid on 16, and we've acquired 2, and it's a matter of getting things at what we think is the right price.
Yeah, we clearly have a difficulty, I think, in some ways, because obviously people are looking for safety, but at the same time, they're also looking for opportunity, and it's a very fine balance. Can we turn now to Councillor Haddingham for if you have any questions, Councillor? Councillor Haddingham? Well, I can come back to Councillor Haddingham if she can't hear me at the moment. Councillor McLaren.
Sorry, Alistair.
My
yes. Question was just about the officers, but Terence covered that, so I'm happy.
Thank you. Councillor McLaren, any questions? Okay, we shall move back if we need to. Councillor Muller.
Thank you, Chair. Actually, just one question. We successfully collected over 70% of the rental income due in the March quarter. Do we have any idea of the percentage we're likely to claim in the June quarter, which obviously ends this week, please?
So working with Jones, Lang, Lascelles and our portfolio managers, we're estimating somewhere in the region of 45 to 50%. But you'll appreciate, this is very uncertain time. So that was looking at the nature of our businesses and our tenants and who were most impacted by the COVID situation. Now, and their ability to trade effectively. Things are changing almost on a daily basis in that space, and a number of those businesses are expected to. Well, some of the retailers have started to trade already. A number of other businesses are expected to start trading within the next few weeks. So that's the sort of broad area that we're anticipating at the current point. Just to clarify that in March we collected over 70% of the rents, and CIFCO were able to make the full debt repayment to the council as a consequence of their sort of cash flow management. And we are hoping that CIFCO will be in a position to make a greater debt repayment than the rent collected in the June quarter. I think the other point to be made is that the rent, as per Chris's slide earlier on in the presentation, showed that rent is deferred. So we are expecting that rent to be received. It's effectively just being reprofiled. So we're receiving at a different time to when we would originally have expected to incur that income.
And I think, Emily, it's important to say that that's part of the responsible sort of landlord-tenant relationship. Working with our tenants as partners in this to make sure that they get through it and it works through a very difficult time.
Councillor McLaren, did you have anything else you wanted to ask?
I did, actually. I'm sorry, Chair. Can you hear me?
Yes, we can.
Oh, right. I had trouble with my mute.
That's okay. We've had this before.
I know, so just bear with me. So thank you, Chair. I've got two questions. The other questions have actually been very well answered by the team. But the one, looking at financial predictions, the main impact of COVID-19 for councils and everybody will be the year 2021 to 22. What is already planned by CIFCO to reevaluate individual investments in the portfolio in the light of what may occur sort of 18 months ahead, and how that would impact the council? And the second question I've got, if you look at financial reports, there's a lot of mentions about the Section 151 officer. And I'm wondering what the relationship is with our Section 151 officer, who I think is in the room, and CIFCO as an independent enterprise. Thank you, Chair.
Thank you. Okay, who would like to address those points?
Well, I'm conscious Catherine is in the room and has another meeting at 11. So whether Catherine wants to step in at this point to explain her relationship with CIFCO.
Yep, I can.
Thanks, Catherine.
Yep, I can do that. As you know, CIFCO is an independent company, has its own accounts, and they're published on obviously Companies House. But Mid Suffolk is the 100% shareholder of that from Babergh and Mid Suffolk's perspective. So what's important for Babergh and Mid Suffolk is the income that comes back into the councils. And as Emily and others have been saying, that there's deferment of that at the moment rather than non-collection. If we were sort of really worried that there was going to be long-term defaults by CIFCO in terms of being able to make their loan repayments, then the councils would need to have conversation with CIFCO about it being a going concern. At the moment, I haven't got any Section 114 worries, if you like, in terms of CIFCO, because we are talking about deferment of income rather than non-collection on a permanent basis. So it's just a timing and more of a cash flow issue. So that's probably how I'd summarise it at the moment in terms of my thinking between the relationship.
Can I take the opportunity here, while we have Catherine with us, because I think my question relates to that function as well, and I notice MCs. I should be about here. We will come back to the rest of your questions, Councillor McLaren. But on the subject of our break-even point, because we are, after all, receiving an income around the 6% level, paying off a loan, basically servicing our debt, and the difference is the income generated for the two councils. Now, the treasury management structure, obviously, is where Catherine comes in. What I'm asking is how bad would things have to be for us not to be able to service that debt? What sort of percentage of rent arrears would we be in, or what percentage of rents would remain uncollected before we were in a position where we were actually losing or not receiving the enough money to service the debt? And I think that's quite a key point. I mean, how far away is that? I think it must be fairly distant, but I would like some words on that.
Catherine, are you okay to answer this, or would you like me to give the figures?
I was going to say I've got them in front of me as well, so I'm happy to answer that. We have looked at what the position is in terms of the position of about break even, and as you're aware from previous answers to questions, the position is different for the two councils. So for Mid Suffolk, because the borrowing costs are higher, the break even point is 40% collection of rent, and for Babergh it's 29%. So Babergh has got more headroom in terms, if you like, of that break-even point because of the lower borrowing costs at present.
And to that point, we have secure tenancies, we have long-lasting covenants, and we've already made arrangements to address this in the future by deferring rents for a short period of time. So we're a long way. I make my observation only. We seem to be a long way from getting anywhere near that break-even point, even in the worst-case scenario. And I'd suggest if it ever got to that stage, I think we'd be worrying about a great deal more than just CIFCO. Anyway, let's move back to Councillor McLaren. I think, have you still got questions remaining unanswered?
Yes.
There was a question about reevaluating.
Yes.
So just from the board's perspective, we evaluate assets on a quarterly basis. That's part of the review process that we have with our fund managers. So we look at assets on a quarterly basis. They are revalued annually. So all of the assets are valued on the 31st of March in every financial year. So that evaluation process is very much part of the board's function. I'm not quite sure what your query then was and how that will impact the council. So I think in part
perhaps the other side of that is we do have a timeline of key events, whether those are rent reviews or leases coming to an end, all that sort of thing. So we have a timeline of key events looking at that over the life of the assets. So that again is, as Emily quite rightly says, is evaluated quarterly just to make sure to see what's coming up, what rent reviews are coming up, where there may be a lot of rent reviews or leases coming to an end or break clauses. So it's all part of the evaluation of the assets looking forward.
And so then in terms of the impact on the council, CIFCO is obviously looking at its income and projecting its income forward. The council obviously has its budgets as well, which look at the income that is already generated by the fund that has been built up, but is also looks at the income that will be generated from the further tranche of the investment. So there's approximately 40 million that is has been approved or was approved last year. So the budget or budgets currently anticipate that investment being made. Does that help to answer your query in that regard?
Thank you, Emily. I think it, and as well, it was answered by Catherine, to be honest, that concern I had. So thank you very much.
Thank you.
Thank you, Councillor McLaren. Councillor Muller, I think we did address your questions, but I'm just checking that I haven't missed you out.
No, we've answered. Emily's kindly answered my question. Thank you, Chair.
Councillor Osborne, any questions from you?
Councillor Osborne, your mic is on mute.
All right, we can move on and come back to Councillor Osborne. Councillor Scarf?
Thank you, Chair. Yeah, well, I mean, coming near the end, a lot of the questions have already been answered. I had questions about the Public Works Loan Board and the alternative sources of funding, and the last one was just the property re-evaluation, so no questions at the moment. Thank you.
Thank you very much. Councillor Wellham.
Thank you, Chair. Am I being heard?
You are.
Thank you. Can I just follow up your question, Chair, about the collection of rent? Have I misunderstood this, or is it that if the collection of the rent goes down to 40%, which is I think what Catherine said was like break-even point, that would service the Mid-Suffolk borrowing, but give no income for which Mid-Suffolk could use for supporting their services? I think I'm pretty certain that's what Catherine said. That.
Yeah. So in relation to Mid-Suffolk, it was 40%. In relation to Babergh, I think Catherine said 29%. So that would effectively mean that the debt would be covered. But it would be the net income that would be deferred for the councils. But obviously that deferment means that income would be received. So it's more about when it's received rather than if it's received.
But that would be an extreme case, obviously.
Yes, I appreciate that. Emily, in your slide 12, you showed that there's a 5.66% downward adjustment of 3.1 million. I assume that's over the year.
Yes, that's right. So that's the difference in the capital valuation in March this year to March last year.
So the loss, paper loss over the year was 3.5 million. Do we know what the total loss is since CIFCO was set up, and what the predicted loss for 2021 might be? And do we know when the losses might cease?
So the losses last year that were published was 3.1 million, and that was made up of approximately £1.5 million of costs of acquisition and £1.5 million of valuation adjustment, which was primarily in relation to the retail assets within the fund. In terms of predicting forward, I would anticipate that there will be further costs that will need to be impaired against until such point as we've completed the investment programme. So as I mentioned before, the costs of acquiring assets tends to be in the order of 6.75%. So that covers stamp duty, professional fees, etc. So those are the costs of acquiring assets. And until we stop acquiring assets, we will be making those losses or impairments in effect. With regard to the valuation of the portfolio, that is market dependent, and it is difficult at any time to forecast values into the future. In fact, as a member of the RICS, I'm actively encouraged not to forecast values into the future, but particularly at this point in time, it's very difficult to forecast what values will be like this time next year because the market is so uncertain. But certainly we do anticipate losses to be made in relation to the costs of acquisition until that that period ceases, and we're expecting the acquisition period to continue until October 21.
Thank you. We're here to scrutinise a business plan. So to help me with that, I've got a couple of fairly basic questions. I need to know a bit more about the flow of funds from the councils to CIFCO and the flow of funds from CIFCO to the councils. So when a purchase is made, is it with 100% loan, or do the councils loan the majority of that and hold a small equity stake?
So the CIFCO is set up on the basis of a 90% loan and 10% equity. So each council holds 5% equity. So as with the fluctuations in the portfolio value, obviously the equity value fluctuates as well, because it's a proportion of the property value that they fund.
Just wanted to clarify something, because the holding company, would that be a separate corporate structure and a separate equity?
No, it's in effect, it's the same equity. It just flows through the company. So it sits, there aren't two lots of 10%. It's the same 10%. So in effect, the holding company owns the 10%, but the shareholders own the holding companies. So that it's the same 10% or 5% per council.
My apologies, Councillor Wellham.
Thank you. So yeah, so following on from that, so the councils have put in some equity. Every time there's a purchase, there's equity. But as there's been a revaluing downwards, presumably the equity that the councils have has also reduced. Do we know by how much?
So yes, as I said, so that equity will fluctuate in value as the portfolio does. But again, it's not, it's 10% of the portfolio effectively, so shared between the two. So whatever that portfolio fluctuation is, that's the equity. So it's not in addition to CIFCO losses, it's the same CIFCO loss, it's just recorded in, it gets consolidated up into the accounts. I think Catherine isn't with us anymore, otherwise she might be better at explaining that. But the holding company figures or accounts will be published later this year as well, along with the council's accounts, and those details are always included within the council's accounts and the holding company's accounts in terms of the actual numbers or figures.
So sorry, I may be a bit thick. So if over 3 years CIFCO makes losses of around 3 million, so it totals 10 million at the end of 3 years, and the councils hold between them 1/9 of the money that's put in, does that mean that the council's equity has dropped by 1/9?
The council's equity will reduce aligned with the value of the portfolio. So equally, should the value of the portfolio increase, then the equity will increase as well. So the equity will fluctuate in an aligned way, effectively. Yeah,
thank you. Yeah, that's clarified it. So do we know what the equity is at present?
So the accounts are currently being prepared at the moment, so I haven't got those figures immediately to hand. But as I mentioned, the equity amount is published within our accounts and within the council's accounts. So those figures will become available once those accounts are published.
Thank you. We've heard that if the collection goes down to 40%, which it's unlikely to, you could service the borrowing, the Mid-Suffolk borrowing, but there'd be no income. So I think that my next question is, this is a risk. Is it a risk that ought to be in the risk table in the business plan?
So the risk table is within the accompanying report, and that's the significant risk register for the council, rather than a sort of operational risk register. But that risk effectively says that there's a risk if CIFCO fails to meet its income returns or its returns. So I think it is reflected in that risk. It's but it's possibly phrased in a more generic way rather than in a detailed way.
Right. Now, so obviously we're going through a difficult period, particularly for Wagamama and Costa and gyms and car showrooms and so on. So because of that, is it reasonable for CIFCO to set the same KPIs as in the previous years?
So I think the board of CIFCO wanted to maintain some consistency in KPIs so that you can, or so the councils can continue to measure us against those KPIs, rather than us amending those too greatly, I suppose, in CIFCO's favour. So we want to continue to have those sort of aspirational KPIs rather than reducing them down, so you can measure our performance more consistently over a longer term. Within the business plan, we do say that we expect KPI 4, which is in relation to rent arrears, to be challenging for us to meet. But we would like to keep that KPIs. That's our aspiration in the sort of longer term as we get through these more sort of difficult COVID-19 times.
So you think that they're realistic over the full year?
That wasn't quite what I said. I think what I said is we want to keep them consistent so you can measure our performance against them. But particularly in relation to KPI 4, that is going to be difficult for us to achieve because of the COVID-19 situation. But we hope to return to 5% arrears in the fullness of time. And so we'd like to keep that KPI consistent, but we are putting our hands up now and saying we think that is going to be difficult for us to achieve.
Well, it's for debate, but whether or not members feel comfortable with you having a consistent target rather than perhaps a more realistic target, but that's a matter for debate. Many businesses include in their business plans a reduction plan or a winding down plan. Now, we understand, obviously, that CIFCO is the investments are for a very long term. But wouldn't it be reasonable to us that the business plan should be able to cover the eventuality of one or more of the councils needing to release some equity from CIFCO? Is that covered in any degree of detail?
So the makeup of the company structure is governed effectively by the articles of the company's operation, the articles of the holding company's operations, and most specifically by the equity subscription agreement between the two councils, as they both have an interest in CIFCO. So there is an equity subscription agreement between the councils, and that would look at effectively if the councils wanted to change their current arrangements, the equity subscription would help to govern how that would be dealt with moving forward.
So is that available somewhere either for members to look at and to understand, or even the public?
That's part of the company's governance. It isn't a public document. It is a document that is for the holding companies. So it would be for the holding companies to determine whether they wanted to share that document more widely.
Thank you.
I think it's important to point out that obviously when it comes to governance issues, that Scrutiny have in the past looked at the governance arrangements relating to the holding companies and to CIFCO itself. And here, obviously, we're dealing with last year's report, next year's business plan, just to draw that distinction.
Oh, absolutely. Now, in section 6.2 of the report, it's stated that the income generated through CIFCO supports the investment in other key projects, and it quotes Gateway 14. Now, my understanding is that Gateway 14, the development of Gateway 14, is funded wholly by borrowing from the Public Works Loan Board, is it not? So I'm not, can you show me where there's a direct link between the income from CIFCO and Gateway 14?
So the report states that the income from CIFCO helps other projects within the council, and I think it says such as Gateway 14. So the Gateway 14 and CIFCO are both property projects. In effect, they have a different risk profile. So Gateway 14 is a development company with no income in the short term. It is expenditure. So the balance between CIFCO, which is an income generating company, and Gateway 14 means that CIFCO can provide cash flow and income into the council in the short, medium and long term against Gateway 14, which is a development company which isn't generating income in the short term but will develop income and capital receipts in the longer term. So there's a balance between those activities. Excuse me, there is also obviously one executive team that serves both Gateway 14 and CIFCO, and as such there are costs that are associated with those with that team, and obviously the income that's generated from CIFCO could be used towards that revenue cost of supporting that team. But obviously that's a income comes into the council and can be used for any number of different revenue costs. It isn't allocated and this money is collected and paid against Y, but it is obviously income that comes into the council and does help to support the services that the council delivers, which includes the exec team that I'm part of that helps to manage both Gateway 14 and CIFCO, and Gateway 14 and CIFCO pay for that by way of recharges to from the council to those companies.
Yes, so there is a tenuous link, but Gateway 14, the development of Gateway 14 would have been possible if we had not had CIFCO. It would not have prevented Gateway 14.
No, and I don't think in the report I'm suggesting that it couldn't go ahead without CIFCO. No. I'm just saying that obviously the income that's generated from CIFCO is immediate and provides cash flow to the council, which enables them to look at other projects that have a longer time scale for cash flow to be delivered. So, Sorry, Alistair, but that's true of any projects that we're delivering through the council.
Could it be seen, Emily, as a counterbalance to Gateway 14?
It could be, yes, indeed.
I'm just throwing that in.
One more very short question, Chair, and then I'm done, I think. Looking at the risk table, there's no mention in there, no specific mention in there of company losses, and we know that company losses will continue, and at least until the all the money is spent, so to speak. Do you not think that there should be something in the risk register about losses and potential future losses?
Sorry, I was on mute. So the risk says the risk is the capital fund does not generate the forecast investment returns. So I think that can be interpreted as both income and capital. It's a broad risk, and as I mentioned, it's part of the significant risk register rather than the operational risk. So it is about consolidating that sort of wider risk element rather than the individual risks.
Thank you. I think I've asked all my questions.
Thank you very much.
Thank you very much, Emily.
can we return to Councillor Osborne, who we passed through last time? If Councillor Osborne has any questions.
Thank you, Mr. Chairman. Well, first of all, the presentation has been excellent, and the questions that have been asked has sort of put a lot of my mind at rest of them, and the answers in particular were well answered. I haven't, so I'm happy with the questions that have been asked. I haven't any myself now because I've gone through that. I would like to make the comment that, of course, our technical skills in crystal balls still needs to come forward a lot, I think, for next year. Thank you.
Thank you very much. I mean, I think it's obviously a learning curve for all of us at the moment, although I think one thing it does point out is that face-to-face meetings are far preferable. There are subtleties that you miss. However, now we've had questions around from all those members. Does anybody want to return to any questions that they somehow omitted in the first round? In which case, if there are no further questions from members of the committee, and if there are, raise your hand up. Sorry, Councillor Carter. Yes.
Sorry, I do apologise for interrupting.
Okay. No
I just wanted to ask the last two questions that I had omitted previously due to the interruption in the background. As landlords, are we responsible for the environmental friendliness of our assets, the insulation, etc.? I do believe it's a governmental requirement. If we are they up to scratch with the insulation? And if not, how will getting the buildings up to standards affect our portfolio financially? How will getting the properties up to standards affect us? And also, I do believe at the introduction, it was mentioned that investing in social housing was an interest market we're looking into. If that was the case, is this buying new properties or building the properties? And if it is building properties, as we have announced with climate emergency, are we looking at building carbon neutral properties supported by renewable energy sources? Would that be seen under? Would we have that information for us now?
So just in response to the question about environmental responsibilities, the majority of our leases are full repairing and insuring, which means that the tenant has the responsibility to maintain the property. And in that case, any changes that were required, whether that's from a choice perspective or whether it's from a legislation required changes, they would be the tenant's responsibility. In the event that the tenant was looking to undertake any changes, they would obviously need to do that in accordance with building regs, and as a landlord we would encourage them to make sure they make sustainable choices. So we're not anticipating any increase in costs for those repairs or adaptations. The majority of properties that CIFCO own do have an EPC rating of C or D, which is a sort of key point to consider, as obviously you can't let properties that are F or G ratings. So CIFCO has, in acquiring its stock, made sure that it does make sure it meets those sort of minimum requirements, I suppose, within that environmental perspective. In terms of your second question, the introduction was talking more broadly about the council's activities rather than CIFCO's activities. So there is no intention for CIFCO to acquire any social housing or to develop any social housing.
Okay, thank you.
Okay, thank you very much, Councillor. Now then, unless any members of the committee have any other questions, at this point I'd like to ask if there are any questions of clarity only from members of the councils who are present in this meeting. And if Councillor Osborne and a couple of others, I believe. Councillor Osborne?
Yes, thank you, Mr. Chairman. the last question that Councillor Carter made surely comes under HRA accounts and comes under a different stream anyway. So, and I thank Emily for the reply about the CIFCO involvement. So surely that is not part of any CIFCO. It's a different stream of funding from the council. Thank you.
Thank you. Councillor Gould, I see your hand raised.
Yes, thank you. I just wanted to push back a little bit, Mr. Chair, please, on the decision to invest in drive-ins, knowing that the councils have declared a climate emergency, and I'm sure that the board realises the impact of emissions on drive-throughs, or I suppose drive-throughs on emissions really, and I just wondered how councillors can influence investment strategy if we believe that perhaps the board aren't following the council's wishes.
Okay, I mean, effectively, from the point of view of the governance side of things, I would say that the strategy, and this is only looking at it from the point of view of overview and scrutiny. Overall, the business plan is looked at by the councils altogether, both separately. And of course, we have representation on the boards of the holding companies and indeed on the board of CIFCO itself. So if a resolution were to be passed in council for a specific area, I would imagine that that would be the best direction to raise such a point. I'm not sure we can do it through a scrutiny function. I don't know what other members think about that.
I was just wondering what the process was. I don't think I was suggesting that it could be done. Quite take what that process was. Yeah,
quite take your point, and I would say that from my own understanding of the situation, it would probably be best addressed through one, our representatives directly by speaking to them, and two, by addressing it within the council chamber in a full council meeting. Now, I believe this is scheduled to come to council, and that's a point. Your point on drive-ins, I believe we have some questions coming in from outside, and I know our governance officer, Henriette Holloway, has been receiving some questions, which she's been frantically trying to draw my attention to, but we are operating multiple screens here, and not all of them are working. Henriette, do you have anything from us, from any member of the council?
Not at the moment. I think Councillor Lindsay did actually ask earlier about the investing in drive-through, which Councillor Gould just raised, I think.
Oh, fine.
I think he wanted some clarity for that, and he didn't quite understand the point, as far as I can see. That's all for now. Thanks.
That's okay.
Chair.
Councillor Gould, if you could take your hand down on the screen, that would be helpful, because we're about to...
I will try to do that, Mr. Chair.
I know, and it's not responding very well, is it?
Has it come down?
It's gone now. But I've had the same delay myself. Okay. So we've more or less covered all the questions I believe we wanted to ask. If anybody has any left, speak now before we go into debate. So I will open the item up for debate. Who would like to start? Well, that was don't all rush at once. And we've heard an awful lot of different ideas. I think the question really is this balance between, one, we want the council's position to be protected and we want to be as safe as possible in difficult times. And the other question is, how do we do that and still ensure that the income, which is welcome, let's be honest, however, whatever size it is, any income to support our services, whatever each council chooses to do with that money, has to be a welcome matter, no matter what people felt about the setting up of CIFCO in the start, or even the concept of CIFCO. It has produced an income, and it looks like it can continue to produce an income. The question is the safety factor high enough? Is it a risk that we think is one we should worry about or not? So members, please, let's talk about it.
Councillor McCraw, I think Councillor Caston, then Councillor Scarf, and then Councillor Willam have their hands raised at the moment.
Thank you very much. I'm only getting one at a time. Councillor Caston, then.
Thank you. I'd just like to say, if we're into debate, a lot of the issues that councillors have brought up from the renewable side and the and how these buildings are run are actually addressed in the climate change task force in the proposals they've put in. They've put forward proposals to investigate that side of it to see what we can do, like low carbon tariffs and looking at those buildings and how we can help tenants to make them more efficient. I think that might answer a few of those questions that have been brought up throughout this meeting.
Thank you. That's very helpful. Councillor Wellham.
Thank you, Chair. I thought Councillor Scarf was going first.
Oh, I apologise. I don't see his hand raised on here, but that may just be my screen. I apologise, Councillor Scarf.
I want to return to the elements of risk. Clearly, a report, probably quite similar to this report, will be going to council in a few weeks' time. And when it does, I would like to see more information around risk and perhaps more explanation of the equity. I had not understood at all until yesterday, I think it was, or Saturday, that we had an equity share in all of these properties, and that equity was reducing and possibly will continue to reduce. And I think that should be addressed in the report. And also, I tried to understand the business about almost it doesn't matter about the losses, but to me it does. And I think that we need more explanation rather than just to say, oh, well, there will be losses and they may be around 3 million a year and they may continue for another 2 years, but it's only a paper loss. I'm quite a simple soul, and I would like more explanation of that, and I would like to see that in the risk register.
Okay, Councillor Scarf.
Thank you, Chair. Yeah, well, we've heard a lot about the success in terms of collection of rents, and we've also heard about the deferment of rents, but my question would be, or my point would be, how do we actually know that the deferments of rents that are proposed, i.e. the shortfall, will actually eventually materialise? We have, I would assume, no guarantee that they will eventually materialise if a company's trading position weakens over the next 6-9 months or whenever they've had the deferment period for. How do we know that we're actually eventually going to get that money? Because whilst it's a cash flow situation, I think there's a huge risk there, and I wonder what others think about that.
Okay, any thoughts from any members, please, on that? I mean, I'm conscious, I mean, again, and I don't know that this is entirely relevant or a direct parallel, but I'm very conscious of remembering in the past when homeowners were facing an amount of considerable negative equity, and obviously the biggest concern that they had at the time was that they, not so much the negative equity itself, but they wouldn't be able to afford to pay their mortgage. So I have a house, I pay a mortgage on it, and frankly, whether it drops a few £1,000s in value at any time or a 5% in value doesn't greatly concern me, because I intend to be here. It's a long-term project. 25-year mortgages are quite common, sometimes longer these days. I don't worry greatly that its value might diminish in the short term, because I'm going to be here for the long term, and I can only live in one house. I know others manage with more, but I can only live in one. What I concern myself about is whether I can service the mortgage, to service the debt. But in this instance, the servicing is actually producing an income. And it's as though I was able to invest in my house and my house was paying me back. Now, that seems to me to be a positive, and maybe I'm oversimplifying this. But again, if an asset is not to be disposed of and you've got no intention or no requirement to dispose of it, which is why I worry when we talk about exit strategies. An exit strategy is the sort of thing you talk about when you're actually going to be looking to clear the decks, bail out, and abandon all hope you enter here. Effectively, we are nowhere near that. If we've done the job properly, and if CIFCO have done the job properly, and I hope they've demonstrated that they have, there is no necessity for that. Why would you possibly want to sell when the market is low? You wouldn't. I think this is obviously a problem. There's going to be a problem for some time to come. But even within 3 months, people have jumped to conclusions that it's going to stay like this or it's going to stay like that. And I don't think we have the data on which to make those assumptions. All we can do is operate with due diligence. I have fewer fears than I might have done before I'd read the report, but that's my thoughts anyway. Councillor Grandon. Your hand is raised. Okay. We have lots of bleeping noises coming on, but I don't hear Councillor Grandon. Councillor Caston then, and we'll come back to Councillor Grandon if that's possible.
Thank you very much, Chairman. Yeah, I just wanted to follow on from what you've just said. I think for me, the most important part of this is rental income, because as that rental income reduces, that's when it becomes a less viable investment. As the actual valuation of our stock may reduce, as it may go up, that doesn't affect the income like the like a situation with the rental. This 40% to cover the interest on our loans, basically, we're talking about in Mid Suffolk. If we lost 60% of the income, we would just be paying our interest on our loan and nothing else. The risk, the major risk for me would be if that was through not having a tenant in there. I don't think rental incomes are going to come down. I think these have been very well chosen. I've been really impressed with how these assets have been chosen for the lack of likelihood that they would be empty for a long period of time, which I think fundamentally is the risk of losing rental income on this. So yeah, I tend to agree with you. If you buy a house, it's and receive a rent for that house, if that rental income doesn't change but the house loses money on its valuation, it doesn't make a massive difference to your bank account. And yeah, it is regrettable that the valuation has gone down over time. I was always expecting it to reduce a little bit, as with all investments, but it doesn't worry me. I don't think that this is something that we want to talk about an exit strategy or look at it as a massive issue. I think it's been done well, and it's only going to get better from now.
Okay, Councillor had 2 or 3 councillors. I think Councillor Grandon, then Councillor Wellham, and then Councillor Carter.
Thank you, Chair. Sorry, I was having trouble with my mute button before. Yes, my concern is deferment again. We are all aware of the difficult economic situation that we're currently entering into, and we're all aware also that a lot of the people that are currently receiving income from the government may soon unfortunately be facing redundancy, which is obviously reflecting on the health of those companies. So I'm concerned that these deferments may also be deferment of simply not paying their rent in the future, or those companies unfortunately going into liquidation. So that is one of my concerns when I see such a high percentage of deferment going forward. Thank you.
Okay, that's a concern. I hope it's been addressed, because I think the quality of the tenants was addressed in the presentation.
Yes.
Who did I say next? It was Councillor Wellham, then Councillor Carter, and that should be us up to date. Councillor Wellham.
Thank you, Chair. Councillor Caston said if the rental income reduces by 60%, we could only just repay our debts. But as we approach 60%, if we were to approach 60%, then He's shaking his head. I think I may have misunderstood them. I'll make the point, and then perhaps Councillor Caston can come back. The point is that as we approach the point where we can only just repay our debts to Public Works Loan Board and so on, the benefit of the CIFCO is reducing as soon as the amount of flow of cash from CIFCO to the districts reduces, then the benefit of having CIFCO reduces. So just making the point that we should be worried about not 60% where we couldn't service our debt to Public Works Loan Board and so on. We should start to worry as soon as we felt that CIFCO could not give the income in terms of the interest on the loan that we've made to CIFCO, and also that we have a reducing equity. The other thing was there's mention of the reducing strategy. It's not necessarily an exit strategy. The reason for my asking this question is around such things as if the councils decided that they did not wish to be involved in, let's say, coffee shops or car sales or whatever, and asked for those assets to be disposed of, how there ought to be something in the business plan for how that would be done.
Can I ask Councillor Wellham, just for my own purposes? I mean, sorry, are you actually sort of specifically saying that the business plan should contain restrictions and exceptions on properties that the CIFCO should not invest in? Because that rather seems to me to be basically taking CIFCO's job away from them.
No, absolutely.
No, I'm just saying it seems that way. Is that what you're suggesting?
No, absolutely not. I'm absolutely not saying that we should alter the business plan to take away car sales, coffee shops, or restaurants or anything. But just as some pension funds have moved away from investing in oil, there may be a situation where it may not come, but there may be a situation where the councils decide there's a particular field that they don't want to be involved in, and they don't want CIFCO to be involved in. If that is the case, then how could we see in the business plan how that would be done?
Well, in green areas, did Councillor Caston not address that earlier in his comment about the report that will be coming to the council? Can you remind us again, Councillor Caston, what that was?
Sorry, there's a bit of a lag on the mic. Yeah, so that's coming to Cabinet next month, and it includes lots of proposals for investigation into different sides of it. It's a big document, so it's worth a good look through and pulling out.
Can I ask for clarity, Councillor Caston, whether it has any reference or influence upon CIFCO and its investment strategies?
It does talk about the investments in general of the council. So yes, I would think that would include CIFCO because it is an investment of the council. Yes.
Okay, but I think it should just be fed through, and obviously it comes to council. My apologies, Councillor Wellham. I just thought it was important to try and marry those 2 points together.
Yeah, I think they are different points.
Okay, sorry, am I a misunderstanding?
Yeah, I mean, does anyone else think, do any other members feel that it would be advantageous to have within the business plan some sort of strategy for reducing, selling an asset or whatever, should the councils decide that they don't wish to be involved in a particular area of investment?
All right. That's the point to consider. Councillor Carter and then Councillor Gould.
Oh, yes, certainly. Thank you. Just trying to get my faculty together after that. I have a bit of difficulty when we're talking about mortgaging houses and staying in the house. When I'm thinking about my terms of being councillors, which is a re-election every 4 years, when there's no guarantee that we will be in the same house, We do not know who the next government will be when there's going to be another election. So we do not know any. So we are basically investing in somebody else's house in the future. But if any mistakes we make now is going to be affecting them later. And what we can see now, how rapidly things are changing just by COVID, how we have had this instrumental change in the way we are working. The chances are there are going to be more changes in future. There's less certainty than we had in the past. We are going to be faced by a lot more things. And we are looking at the climate crisis, climate emergency, which we have announced, which we are currently acting at a glacial pace, but we are looking at, we're going to have to change our way of life in future. So we are going to be looking at possibly further cut downs in offices, regardless of the way it's utilised, because it is more environmentally friendly working from home. We are going to be looking at hopefully less driving, so the drive-throughs again. So I'm quite concerned about how this could affect us in the future, and if that's the case, then I would agree that we do need to look at a exit strategy now to have in place in case it does start to implement on us, because by the time it does start going belly up, we might not be in control of the count, we might not have control of it, and if we don't look at these strategies now, it might be too late to implement them in the future.
Okay, Councillor Carter, I've just been asked to make a point. I wonder if it might be a good idea for you to turn your camera off, as your daughter may be appearing in the background, and this isn't because of any of us being embarrassed, but it's just partly a safeguarding issue. I hope you appreciate that that's the reason. Okay,
thank you. Sorry about that.
No, not at all. I just think it's probably for the best. Right, I'm sorry, I've lost my screen and I'm going to have to operate by memory. Who was ready to speak next? I have requests from people that we've already heard from. I do have one from Councillor Haddingham.
Thank you. I do think Jane was in front of me. I was just going to say I've got another meeting coming up at 12, and so I'm quite happy, like you said earlier, like Councillor Caston said, with how things are. These are uncertain times, but anyway, I would just like to move to the recommendations in the report, and I'm happy to propose them.
Okay, before we come back to that, I would obviously have to ask, is there a seconder for that motion? And that would be recommendations, presumably sorry, I'm looking at them now, 3.1, 3.2 and 3.3. Am I correct there, Henriette?
Yes, I believe you are. I'm just checking I just lost my agenda, so I shall
I've just lost my screen as well, which is a real pain. So I'm literally doing this from memory.
Yeah, I would second that
Okay.
recommendation.
Now we have a proposer and a seconder. Before we go into any further debate, I want to address the question, and I think it's an important one, of whether part 2 is necessary. I'll try and explain why. In the preparation and construction of the report, we made strenuous efforts with officers to move as much as was possible from the confidential part of the business plan into the public session, and that's in the interests of transparency. And in fact, you'll note, if you look at them both, that similar points are made constantly throughout the reports. And the only fundamental differences I can see are the confidential report contains details of some rents and repayment schedules, which frankly I don't believe the public, well, they can't be in the public interest. They are confidential business matters. I would have to say, from what I've heard today, is that, and everybody has carefully avoided those subjects, that there may not be a need for us to go into part 2 in any way. Do I have any thoughts from members on that subject?
I agree with you, Mr. Chairman.
Yes, I agree also, Mr. Chairman.
I agree too.
Chair, I saw that Emily Yule had her hand up, and I just wonder if we ought to hear from her before we go any further.
By all means, Emily, would you have anything to add to that?
Chair, am I unmuted?
Yes, you are. I can hear you, Emily.
Perfect. I've lost the button on my screen.
I can't see anything. I'm literally operating like a big phone call.
Excellent. Well, you're doing a fine job of that, Chair. It was just a point with regards to the recommendations, and that's to say that in the report, the recommendations have been written for Council's consideration of this matter. So you just will need to adjust the recommendation from the committee, which is essentially to just say that you support those recommendations being taken forward by the Council. So as long as the proposer and seconder are happy with that amendment, then that can go forward as the motion.
I'm happy with that.
Yeah, I'm happy with that, Mr. Chairman.
Alistair appears to be frozen.
Let me just see if I can get hold of him. One moment.
Something coming from above.
Just one point for Emily while we're waiting. If Lavinia's got to go at 12, do you need to have the vote as she proposed it before she leaves?
I would have thought so.
I can be a little bit late, but that is my I would like to leave as soon as I can. But like I say, I'm happy to stay on for another 15 minutes or so.
Thanks, Councillor Busby. Technically, the vote can be taken without the proposer in the room. Once the motion is moved and seconded, it becomes a substantive motion that can be voted on. I'm just wondering, actually, if Councillor Osborne might want to take over as Vice Chair on the Babergh side, or indeed Councillor Wellham as the Mid-Suffolk Chair in Councillor McCraw's absence, so we can move this item on before Councillor Hedingham has to leave.
It's all right, I'm back. At least I hope I'm back. Can you hear me?
Saved by the bell.
Yes, can hear you.
You can hear me. Fine. My apologies for that. Literally, the screen went white and faded out. Okay, we are more or less agreed then that there is no requirement for us to go into part 2. We can now discuss the debate on the proposal that we confirm the recommendations as presented in the report can go to Council, subject obviously to any amendments, any changes that anybody wants to make, but we have a proposer and a seconder for the motion as tabled.
Chair, I don't know if you can see that my hand is raised.
I can see your hand is raised, Councillor Wellham, and also Councillor Gould.
I would like to propose an amendment. We can note that this business plan will be going on to Council, but I would like to add that there should be more information in respect of the equity, the losses, and the risks available to councillors when they discuss the business plan at their respective council meetings.
Okay, so I don't know if you have that, Henriette. The proposal would be an amendment to add that more information in case of the risks, equity losses, etc. should be presented to Council when this paper is presented to them. Councillor Hedingham, will you be happy to accept such an amendment?
I'm sorry, I really don't think there's any need for that. I think we've got plenty of information here, and I think they've been very thorough. I don't know how Adrian feels, but that's my feeling.
No, absolutely, I agree with you. I mean, it has been a thorough scrutiny of this, and the information that is available is there. So I think Councillor Wellham's amendment is warranted. However, I feel that it's all there, so I can't see a need to change it.
I don't know basically at this point, Councillor Wellham, you could propose an amendment and we would take it as a separate item to be proposed, seconded and voted upon. Or we could request that officers include these matters as a matter of course within the report, because why wouldn't they? It's clear that you have concerns in those directions. I think they're valid concerns, but it's not as Councillor Haddingham suggests, necessary if officers are prepared to deal with that. I have a hand up from Emily Yule here. Perhaps you can advise us, Emily.
Thank you, Chair. Actually, you explained it very well indeed. So it's essentially if Councillor Wellham would like to put that forward as an amendment motion, he will need a seconder to his proposal, and then the committee will need to vote on whether or not to accept that amendment. If that motion is passed, it becomes the substantive motion. If not, we revert back to Councillor Haddingham's proposal.
Okay, is that clear? Okay, Councillor Wellham, what would you like to do?
Yes, I have proposed that as an amendment, and I am looking for a seconder. And the reason that I feel it is important, and whilst to a degree I have some sympathy with what Councillor Haddingham and Councillor Osborne are saying, but if this does go forward as an amendment, as I wish it to, then that information will be available in advance of the council meeting to all councillors. If it has to come up by me asking the same questions in the Mid-Suffolk council meeting, then so be it.
Okay,
so but it would be far, in my view, it would be far better.
Okay.
If all of the both councils make this information available to all councillors.
Fair enough, Councillor Carter, you have your hand raised.
Yes, so it's only it's the second to be amendment, so I do feel the same.
Okay, so we have a proposer and a seconder for the amendment. I think the best thing at this point then is to conduct the vote. The governance officer will conduct the vote by Councillor Gould. Do you wish to say something?
No, I think my point has been answered. Thank you, Mr. Chair.
Okay, your hand is stuck. That's what it is.
Right.
That's okay. The governance officer will conduct the vote. This will be done by roll call in alphabetical order. Henriette?
Right. So this is for
on
the
amendment only.
On the amendment only to include more information regarding risk, equity and loans to be more available for councillors in the upcoming report to the council meeting. I'll do the roll call in alphabetic order, starting.
Chair, may I say it's risk, equity and losses.
Risk, equity and losses. I do apologise. Risk, equity and losses. That's fine. Okay.
With that amendment to the amendment, we've got it.
So you will have to reply for or against or abstain for the amendment. Councillor Terence Carter.
For.
Councillor James Caston.
Against.
Councillor Jane Gould.
For.
Councillor Catherine Grandin.
For.
Councillor Lavinia Haddingham. Councillor Lavinia Haddingham.
Against.
Against, right. Councillor Alistair McCraw.
Against.
Councillor Mary McLaren.
Against.
Councillor Dave Muller.
Against.
Councillor Adrian Osborne.
Against.
Councillor Keith Scarf.
For.
And Councillor Keith Wellham.
For.
Can we have the result of that vote, please?
It is a total 4, 5 and against 6. The amendment is lost.
All right. I would still like to recommend, though, to officers that their points raised by that amendment be addressed within the report that comes to council. But we can do that in an informal manner, I believe, and achieve much of the same objective, reducing the need for questions. So we've now come to the substantive original proposal, proposed by Lavinia Haddingham and seconded by Adrian Osborne, if I'm correct. And I'd ask the governance officer to conduct that vote in the same manner.
So, Chair, just to confirm, this is that we support or
support the recommendations,
endorse the recommendations.
Yes, that will be going to council in due course.
Okay, let me just. Okay, I will be reading the roll call again in alphabetic order. You can say for, against or abstain. Councillor Terence Carter.
Abstain.
Councillor James Caston.
For.
Councillor Jane Gould.
Abstain.
Councillor Catherine Grandin.
4.
Councillor Lavinia Haddingham.
4.
Councillor Alistair McCraw.
4.
Councillor Mary McLaren.
4.
Councillor Dave Muller.
4.
Councillor Adrian Osborne.
4.
Councillor Keith Scarf.
4.
Councillor Keith Wellham.
Against.
And the result of that vote?
And result is we have 6 votes for, 1 vote against, and 2 abstentions, which means the motion is passed.
Can you check that? I have a different count.
2, 3, 4, 5, 6, 7.
I have
Sorry,
8.
I have 8. 8, 1, 2.
8 for, 1 abstention, 2 abstentions rather, and 1 against. Is that correct?
2 abstention and 1 against. That's correct.
Does that concur with everybody else's reading of it?
Absolutely.
Yep. Okay, we're not having to go to part 2. I thank members for that, and we will now be able to move on to the next item of the agenda. Can I thank all the speakers on behalf of CIFCO and all the officers involved in presenting the report. We have put you through the mill today. We've given you a lot of questions to answer, but I suppose that's what comes with the territory. Anyway, look, thank you very much for your time and your efforts. And we will obviously, as a matter of overview and scrutiny, we shall be seeing you in approximately a year's time. Thank you again.
Thank you.
So now we are back to the public. Well, we don't have to worry. We're never going to have the public session. So we can now move to the confirmation of minutes. And I'm just having to find this out. Now, there are 3 sets of minutes, 1 for Mid Suffolk, 1 for Babergh, and 1 for the joint overview and scrutiny committees on the dates held on those minutes. What you're asked to do is to vote for your respective committee minutes on those ones, but all vote for the joint minutes. So with Keith's permission, which I have asked for in advance, I must confess, we have to come to item 3, which is MOS/19/11, confirmation of the minutes of the meeting of the Mid Suffolk Overview and Scrutiny Committee held on 16th of January 2020. And I remind you, only Mid Suffolk members may vote upon this. So the first question is, are there any points regarding the accuracy of those minutes?
Chair, there is just one typo on page 9, paragraph 2011, the Assistant Director, Corporate, it should be Resources.
Corporate Resources. Okay, can we make that change?
Of course.
Thank you. Can I have a proposer for those minutes, please?
Yes, I propose.
Councillor Wellham, and a seconder?
Happy.
I see Councillor Muller's hand, so that's fine. That's proposed and seconded. A governance officer can now take a roll call vote.
As same procedure as before. Councillor Terence Carter. For, against, abstain for the minutes.
Microphone might be muted.
Do apologise. I said 4.
4. Councillor James Caston.
4.
Councillor Lavinia Haddingham. I think Councillor Haddingham has left.
Room, so.
Yes. So Councillor Dave Muller.
4.
Councillor Keith Scarf.
4.
Councillor Keith Wellham.
4.
So that's carried.
Okay. The minutes of that meeting have been confirmed, and well, I don't think necessarily I will be signing them, but perhaps Councillor Wellham will be signing them as he's the chair of Mid Suffolk Overview and Scrutiny. That's okay with you, is it, Keith?
Absolutely, thank you.
Okay. Right, the next item is item 4, BOS 19/9, confirmation of the minutes of the meeting of the Babergh Overview and Scrutiny Committee held on the 20th of January 2020. And in this instance, only Babergh members can vote. First off, Babergh members, are there any points regarding the accuracy of those minutes? No? Can I have a proposer, please?
Propose, Mr. Chairman.
Councillor Osborne proposing. Seconder?
I'll second that.
Sorry, that's Councillor McLaren.
Yes.
Thank you very much. Okay, we can now proceed to the roll call vote for Babergh.
Same procedure. Councillor, same procedure. For, against, abstain, please. Councillor Jane Gould.
For.
Councillor Catherine Grandin.
For.
Councillor Alistair McCraw.
For.
Councillor Mary McLaren.
For.
And Councillor Adrian Osborne.
For.
So that's carried and confirmed.
The minutes of that meeting, therefore, have been confirmed, and they will also be signed at the next practicable opportunity. Item 5 is JOS 1930, confirmation of the minutes of the meeting of the Joint Overview and Scrutiny Committee held on the 20th of February 2020. And of course, in this instance, both councils may vote. Any points regarding the accuracy of those minutes?
Chair, there's just one on page 26, the second line down. Planning enforcement cases were a work in progress, I think that should be.
Okay.
I'll make that note, thank you.
Thank you very much. Can I then have a proposer, please?
Yes, I propose, Chair.
Councillor Wellham, and a seconder?
Happy to second.
Councillor Muller. Okay, the governance officer can now take a roll call vote.
There again will be in alphabetic order: for, against, or abstain. Councillor Terence Carter.
For.
Councillor James Caston.
For.
Councillor Jane Gould.
I wasn't actually at that meeting, so I don't know whether that means I would abstain.
You can't vote for the minutes, then that's fine.
Oh.
I'll take you out. Councillor Catherine Grandin.
For.
Councillor Vinya Haddingham.
We believe
She's left. Sorry, yes, I do apologise. Councillor Alistair McCraw.
For.
Councillor Mary McLaren.
For.
Councillor Dave Muller.
For.
Councillor Adrian Osborne.
For.
Councillor Keith Scarf.
For.
And Councillor Keith Wellham.
For.
That's confirmed and carried, or carried and
Okay,
confirmed.
those minutes having been confirmed, they'll also be signed at the next practicable opportunity. We now move to the end of the agenda for item 10, the information bulletin, but there is no information bulletin this month. So item 11 is the forthcoming decisions list, particularly relevant to cabinet functions. Does anyone have any comments upon the forthcoming decisions list? Use the raised hand function if you do. Councillor Wellham.
Chair, I just wondered whether we ought to consider scrutinising the future delivery model for public realm in advance of Cabinet in September. I don't think we need to make a decision, a formal decision today, but I think we should consider. Could I ask a question about it?
I see your point. I'm just looking at the September arrangements. The next available, the latest we could do that, if coming to Cabinet in September, scrutiny need to be looking at it in August at the latest.
Yeah.
So what I'd suggest is that we ask Henriette to look into our work schedule and programme. We do have items scheduled for, which we'll be coming to in a moment, for both July and August. So this will be adding on to our August workload. Councillor Wellham?
Yeah, could I just ask, is there a task and finish group or a cross-party group looking at that? If so, then scrutiny won't need to.
I believe there isn't, though there has been one in the past. I recall being on one 2 or 3 years ago, but it went nowhere because the recommendations by the then consultants were rejected by the then administration. So for the moment, I think it's something we'll have to look at in the chairs meeting. The suggestions made. Do other members have any thoughts on that subject as a worthy one for scrutiny?
Yes, I tend to agree with you, Mr. Chairman.
Yeah, I would agree as well.
It's worth looking at, yes?
Definitely. Yeah.
What we'll try and get is a preliminary indication from the officers of what might be under consideration, and then we chairs can make a judgment along with the vice chairs on your behalf, if that's all right with you, members.
Yes.
Fine, thank you very much. Okay, so I'm just going to switch between different things. So now items 12 and 13. Which are the two separate work plans for Babergh and Mid Suffolk. And I think it's fairly clear that at the moment those two plans are very much aligned and will be for this effective council year, although we're crossing over slightly. Now, one point that came up, and I'm really glad to see that this is an opportunity for a little proactivity. Councillor McLaren sent an email to myself and the chair at Mid Suffolk, Keith Wellham, on a webinar, a CIFFA webinar, CIPFA, that she attended, which dealt with some scrutiny functions. And I wonder if you could address that for us, Councillor McLaren.
Yes, thank you, Chair. I'm not sure how many of the members were actually present at that webinar. I know there were a few from Mid Suffolk, but it was put on by CIFCO, understanding the impact of COVID-19 on your council. And the session was 3.5 hours long. I was like flagging a bit at the end, but the focus was on understanding the coronavirus and its impact it had on council activity and established policies and procedures. And I think this morning we've actually looked at that in relation to our previous item. So the subjects covered were finance, maintaining effective controls and governance, the important role of procurement in a crisis, the impact on revenue collection, and then there was a final session, which was, we were all in this together, concluded by a virtual panel discussion. But the training was excellent, and for me, the underlying message from all speakers was the responsibilities of councillors, especially of those that do audit, governance and scrutiny. Mm-hmm. And we really should be not necessarily looking only at the past, but on the new normal. And the message there was that councillors and the input of councillors to their council should not be diluted or diverted by other pressures that might be happening within the council. Some councils already having full council meetings. And on a personal note, I was surprised how little I knew about procurement retrospectively, and even less about its current activity. And I thought that was a subject that might need to be pursued. We have been promised a full recorded version of the day with chat box scripts.
Excellent.
I rang CIFCO and they're in the middle of sorting it out, so it's not ready. No. But as soon as I get it, then I will send it to both chair of both.
The reason I raised this is that amongst our forthcoming agenda for next month, one of the items is our own self-examination, which is basically what I call checking for lumps, where we actually scrutinise the scrutiny function itself. And I think that's a valid and sensible point to do. We've done it in the past and it's been quite useful. It's not there to act as self-criticism or whipping ourselves, nor is it to take self-praise. It's to actually take a proper look at what it is we do in a scrutiny function. And I think by that time, members will have had a chance to see the reports. And they may be, for this last year, they may be surprised, but despite the lockdown that we've been through, just how much stuff the scrutiny committees at both Babergh and Mid Suffolk and jointly have achieved this year. I was surprised myself. So if we could have that with luck for that meeting, that would be very helpful, Mary, because we then have a little bit more information. I think the question of how you scrutinise a post-COVID-19 world and the new normal is going to be such a vast question. And of course, it's going to be constantly changing as the months go by, much as the weeks have gone by. But I agree with you, it is something that's going to have to be done. But how systematically we would achieve that without overloading ourselves, I believe you're right, though. We mustn't be distracted by the day-to-day. And one of the things we've always managed in scrutiny is to move on where we have done a subject more than once, or we think we have got a handle on the subject. We say, right, we don't need to hear about that anymore until something happens. This is what needs to happen. And I believe we can possibly put this into next year's scrutiny plan going forward. Would that make sense to you?
Thank you, Chair.
Thank you. No, thank you very much for going to the trouble of doing that, and if that's circulated around, we will be there. Right, so as I've said, you are going to receive the scrutiny report sometime ready for the next council meeting, both for the Mid Suffolk one and the Babergh one. As I say, I hope you'll have a chance to read through it and take some pride in the work that you've done. and then we can all have a look at that again in Scrutiny next month. Our next meeting will be once again a joint meeting. You'll be pleased to hear, chaired by Councillor Wellham, and that'll be on the 20th of July 2020. Arrangements to be made, but I would imagine we'll be doing something remote like this, and perhaps we'll have got some of the bugs out of the things. And thank you very much, all of you, and thanks to any members of the public who've stuck this out, watching us on YouTube, and anybody who comes to look at us in the future. Thank you very much, everybody. Have a nice rest of the day.
Thank you, Chair.
Thank you.
Thank you, officers.
Thank you.